Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Let's kick off. So, China came out with disappointing numbers. Remember, I've been saying for a while, watch China. Keep an eye on China. The number two economy is failing. So, its producer price index came out today, which is effectively the manufacturing inflation number in China, came in lower than expected. Now, normally, in a normal economy, the markets would go up and everyone would be very excited that manufacturing inflation is coming down. However, with China's monetary stimulus post pandemic is not working, it's a very worrying concern. China is failing, China is dropping, and it's not successful in raising prices. Normally, prices should rise in a vibrant economy due to demand. But if there's no demand, then obviously you have a deflationary impact. In other words, prices will go down. If prices go down, that shows the economy is not growing. And that's a major concern to the central bank in China and obviously the People's Republic of China, which is supposed to be an ideal communistic setup that is giving everyone the idea that communism is successful and capitalism is a failure. Well, at the moment, China is failing and it is the number two economy globally. If China fails, then woe behold, there will be a backdraft and impact on the rest of the developed Western world. Being the number two economy, China's what saved the world back in 2009, 2010, when the Western economies were sinking as a result of the banking crisis, and China came along and bought in all the raw commodities. But that's not happening today, and yet Wall Street analysts and the Western central banks, not only the central banks, but the capital markets, are not paying attention to this. If China fails, that's going to have an impact on the rest of the world. They need China to be a booming economy in order that goods production sales go up. Now, there's other numbers coming out also from China this week. Again, understated as far as the Western analysts are concerned, but you cannot ignore the fact that if China goes down, then that's going to impact the West. And China is going down. It is failing. Its property market is in tatters. Its production's in tatters. Its exports in tatters. In addition to that, as I mentioned yesterday, it's going into some sort of mini trade war on semiconductor chips with the US, which is the worst thing possible. So keep an eye on China. As regards the rest of the markets, what to expect this week. As mentioned, you've got inflation reports out in the US. You've got CPI, you've got that's consumer price index, retail price inflation, effectively. You've also got PPi, manufacturing inflation, which is producer price index. You've also got the Michigan sentiment report on Friday. You've got UK GDP, which I mentioned. Also, you've got Bank of Canada looking to raise rates, or expected to raise rates by 25 basis points. Those who are forex traders, keep an eye on the Canadian dollar. Gold is floating down a little bit for those who are precious metal traders. It's coming off slightly. It's probably going to test the 1900 level. That's a major support level. If it drops below that, then 1890 is the next level to keep an eye on. Obviously, if it falls below that, then it's all going all the way back down to 1850. Look at bonds, 2 years, 10-year US Treasuries. Massive divergence there between between those two particular bonds. The 2-year Treasury is well above 5% yield. Now, when there's a divergence, when the yield on the 2-year is higher than the yield on the 10-year, then that is a clear indicator of a recession. And it's been like that now for over a year. I mentioned it last year when it first appeared, and it's widened. So in other words, the 2-year should be lower than the 10-year in terms of yield, but now it's been higher for well over 12 months. And that is a clear indicator of an up and coming recession. However, Wall Street and the West seems to be ignoring it. So again, keep an eye on those two yields. The yields are going up, clear indicator of a recession, clear indicator of a downdraft coming on equity markets. So keep an eye on that one also. Foreign exchange, the pound is creeping up. It's going up to pound dollar's gone up, but that's called cable. It's gone up to 128.5. Okay, I expect it to test the 129 level. The pound trend line, the dollar trend line is down, so it's down against the majors. However, look at dollar yen. The dollar is strong against the yen, but the yen is actually very, very weak. Again, due to the difference in monetary policy, where in Japan they've got zero interest rates, or they want to keep interest rates at absolute minimum. When the US they've got higher interest rates, so that's causing the dollar to be strong against the yen. If dollar yen moves above 145, then you can expect Bank of Japan intervention regarding dollar yen. Cryptos, looking at Bitcoin solid at 30,000. A lot of rumors out there, a lot of news, a lot of media pushing Bitcoin, expected to go up a lot higher than the 30,000 level. Could well be near term. I'm not too sure. Longer term, yes, a bit of volatility, but it is solid at 30,000. Expect also another regional banking crisis towards the end of the summer as more and more debt comes to be repaid in the US, but yet there's no money to repay it, and that will end up causing the Fed to push that printing button to start printing a lot more money again to save the bank. The comments from my colleagues are that the banks are safe, they're solid, they've got plenty of cash, there's not a problem. I don't agree with that. In my opinion, they're wrong. The regional banks are in severe trouble, serious trouble. At the moment, it's being covered up by a plaster, but that gaping wound is going to end up shocking the banking system. You can share, subscribe, comment. This is Mayor Walensky with Driving Markets. Catch you later.